YouTube, what it do? It's your boy Little Petty checking in with you guys with another stock market episode. Alright, you guys, this is actually a futures episode. This ain't even a stock market episode. This is a futures episode. Futures, baby. So we in 2021. We trading futures. This is probably not the best video to open up, but this is the reality of trading. So let's go ahead and break this down. As you guys probably know from the title of this video, Lil Petty blew up his first futures trading account. Now, this video is not to try to push anybody away from trading futures, but this is the reality of trading futures. So let's go ahead and break down. I'm gonna give you guys my story. We'll talk about it. What happened today in the futures account, how I blew it up. Let's go ahead and talk about it. All right, you guys, if you guys are new, make sure you guys like, share, comment, and subscribe so I can give you guys more videos, content. All right, so let's go ahead and jump into this. We're not gonna waste no time. Let's talk about it. All right, cool. So account blown up. What happened? All right, so I had funded this account, my TradeAvate account. I'm gonna show you guys log in real quick. All right, so we got our TradeAvate account open. Boom. We got our live account. It says right now currently have a live account, needs to be funded. That's because I blew my account up. So and when we go into here, it's going to show you guys that I currently only have 50 cents because they liquidated me on my positions. So what happened in the short answer, a little bit of over leveraging. I did have a trade plan. My whole thing, let me pull up the chart real quick. It's a little bit easier to talk with the chart in front. So I had a trading plan. I did stick to it for the most part, but I'm still working on learning to manage the position when you're in profit. So when you're in profit and say you want to tag out and then get back in for a cheaper price, because I knew the NASDAQ was going to keep going up, but I knew it was going to pull back. So getting chopped up in this little area right here is actually where I blew my whole account up. And it was through over leveraging just a little bit, and yeah, simple as that. So we'll go ahead and talk about it. So the trade plan was going into it was the trade had set up. I set this trade up probably a few days ago, and what I was looking at is when you come over here to the NASDAQ. This was when the NASDAQ was, when we hit the all-time high and then we started pulling back. Now I was looking for the dip buy to ride up back up to the 1300 level. So these are the zones that I had mapped out that I thought were going to be potential buy areas to put on the trade and ride it up from here, from this zone up to here, to this zone, or the $1,300 level. So that was the trade, was to buy this dip and then ride it up. And obviously you guys can see the trade played out, and we have the trade mapped out right here. So let's go ahead and talk about it. Let's talk about how I blew my account up, what happened in the trade, yada yada yada. So I'm gonna zoom in real quick. So on Sunday, the futures account, Friday, the stock market ended up selling off into the close on Friday. Sunday, the futures went down lower, and then they set this bottom. Now this is when we got alerted to buy the dip. So I got alerted to buy the dip. I went ahead and grabbed the dip, and I had bought the dip. I think it was right at this 55 level. So I put my stop right below this lower wick, and then I went out, went about my day. I ended up getting tagged out, and then I got back in, and then I ended up tagging back out again. So I tagged out in this candle twice. So I got in, got out, and I tagged back out, and then I was like, okay, well maybe it's probably gonna roll over. So I kind of just walked away from it from that day, and then the next day. Oh, so the reason I closed the trade out was Monday was gonna be MLK Day, a holiday. So I'm like, okay, it's probably gonna be light volume, choppy. I'll more than likely get the dip buy, on Tuesday when the markets open up and it's volatile. So I go about on my day, and then the next day I wake up, and we were actually in this blue zone, and this is when we were able to trade. This was yesterday night, so today is Tuesday. So Monday night, when we're getting ready for the preparation of Tuesday. So the future is in this blue zone. I ended up saying, you know what, I'm gonna grab the blue zone and I'm gonna ride it up. So what I ended up doing was I bought the blue zone, I put my stop right under here, and then we rocked it all the way up to the top of this yellow zone, and then I locked in my profit. Now I'm gonna go to a smaller time frame so you guys can kind of see what was going on, because the futures were ripping yesterday, and that was a great opportunity, just to ride this momentum up. We ended up riding this momentum up. I put my stop right at the top of this yellow zone. We tagged out. Now my problem was, this is the problem that I got to work on, and what actually blew my account. So we tagged out for a $600 profit, and then we ended up like buying the dip like right here, and then we ended up stopping out. Right here, and then it wicked. So I'm like, well, that was probably the bottom. So I bought right back in, and then we didn't lock this in. This candle right here. I remember this candle. I'm like, well, break even, because I'm thinking the trade is 50 points away from my take profit zone. So at this point, I'm like, okay, well, we're not far away, but it is the after hours. There's a slim possibility we can get up here, but there's gonna be sellers in this yellow zone. That's how it works. We go from zone to zone. This zone right here is more than likely gonna have sellers, so that's why I took my profit right here. Now, when we ended up getting back right here, after I bought the dip, I bought it, and then I think I tagged out right here and bought it back in. And then when I got up here, I'm like, well, I'm basically at break even. I can walk away right now and possibly buy the dip in the morning, because I was 90% sure we were going to get a dip in the morning. All right. So long story short, we're chopping around in here. I get tagged out. A few of these wicks had tagged me out, and I felt like they were literally chasing my stop down. I'm not saying that they were literally chasing my stop, but I was literally like, dude, I got tagged out. On the lowest part of the wick. So I got tagged out on the wick. I got tagged out on a wick. And then I was like, no lie, I got tagged out like 3 to 4 or 5 times on wick candles. So like I would see this low, I was already in. I would take a small loss, and then it would rip back up, so I would get right back in. And then it would pull back, then I would lock in the profit or whatever. So I was just doing a whole bunch of nonsense in this zone, when really the trade is, get it up to this level right here. That is your take profit. So long story short, to get through this video, I know I'm rambling, but we got chopped up in this zone, and then going into the open, I was still overnight holding my position. So I ended up tagging out right here, and then when we came down into this area right here at about 4:45 in the morning, I was still up. I was like, yo, this is type 2. Like, I have to take this trade. I was tired. Like, I'm telling myself, but in reality, I would take that trade, So I took the trade, and then I put my stop right here. We ended up getting tagged out, and then, I don't know, it was a long day. So, but, going into the open, I was holding about 6 micro contracts, and I had about like an $800 balance. I started the account with 900. When I got it up to here, it was at 1500, which I should have walked away. And then my whole game plan was, okay, we want to buy the dip, the type 2. So say for instance right here, I lock it in, I walk away, I set my alert, as long as we don't get above this zone, we don't worry about it. But we do buy in this zone, but you want to not get chopped up in this zone. So if you're going to buy, you know, this dip right here, your stop has to be right here, you know, or it needs to be outside of the zone, to be honest. So if you're buying in a buy zone, you need to set your stop outside of the zone, because there's no point to buy a dip right here in the buy zone. Say you buy the dip and then you get tagged out for a loss, and then, you know, then it rips up on you. That's why you do not want to tag out and play patty cake with these tickers in the buy zone. So in a buy zone, you need to make sure your stop is below the zone. So we get out at the type 1, then we buy the type 2. We would have got stopped out. Cool. One losing trade, but I lost like 3 to 4 trades in here. So after this $1,500, I basically was at break even $900 going into the open. I took this small trade and I got stopped out, and then I got this trade right at the gate, and then as you can see what happened. Now you're probably thinking, well, you would have lost money anyways. Well, the point I'm saying is, going into the open, I'm telling myself, okay, we're more than likely gonna pull back. You know, we had a gap up, a crazy gap and run, you know, and I was betting. I'm saying, like, yo, I know, I'm like 90% sure the way this plays out. So let's break it down a little bit more, because look, we're gonna get into the time frames and show you guys what I'm looking at. Give you guys the chart analysis. So we rocked it up to this zone. Boom. This is where this is going to be another, sellers are going to be here, but if we're going to buy in this zone, we want to tag out below this zone. So we know that, okay, cool, this trade obviously is going to pull back to another zone. We get out. You don't want to tag out in the zone and then rip back up, and then, you know, you're just losing money inside of a zone. If you just hold your position from the blue zone, you're good. You don't even tag out, because your profit target is all the way up here. You just let all this consolidate. So if you got in on the blue zone, which I got in down here on the blue zone, we never would have been tagged out. Boom. You rock it up into the to the profit target. All right, so let's look at the candles, because look, this is what I was looking at. So bull flag right here, cool. Everything's good, you know, looks good. Hourly chart, and this is the first red flag right here. This candle right here is red flag. This shows a sign of breakdown of structure. We are clearly on this trend, but we're still kind of in a bull flag, but this broke structure. Next chart, next candle, red. This is this type 2 to buy though. So okay, we buy now. We finally buy after we tagged out right here. This would be our first buy opportunity, and our stop goes below this wick right here, under this candle wick right there. All right, cool. So now you got stopped out, but this is going into the open. So going into the open, you're getting your dip that you officially wanted after selling out right here. So what I was thinking is, okay, we're either going to come test this purple zone, or we might come back and test this blue zone, which will be the chance to buy the dip. Whoops. Boom, boom. This is at 8 o'clock. And then I'm also watching the 4-hour chart. I'm looking at the 4-hour trend. I'm looking at everything. So right here, we were looking at that. That's bullish. Next candle, boom. Okay, but we're still uptrending, and then we break out at that next 4-hour candle. And so in this little area right here, because I was holding too many contracts, and because I felt like I was probably just emotionally tied to the play, because I got the $1,500 right here, the $600 profit, and then, you know, I'm like, well, I definitely don't want to if I'm gonna tag out, cool, I'm gonna tag out, but where am I gonna buy the dip again, you know? And then I held through the morning volatility, which is a no-no when you're holding big size positions. So that literally these candles right here, and if you go into the smaller time frame right here, these candles are, you know, 40, 50 point moves. And if you're holding 8 contracts, you know, 16 times 50, not saying that you're gonna take the whole L, but when your trade plan is to get it up here, is to ride it up to the 1300. You know, I trade with stops, but when you tag out right here and then you get emotional and you're holding into the open, that's going to be a no-no, because the volatility will get you. But obviously the trade was correct. But I got left with the 50-cent account, which this account should be at about like 4,000, because this trade right here would have netted you know, this was a good trade. This was a really good trade. This was a, let's move it up from right here. You know, this is a 1 to 11 reward ratio. So that's what happened today with me. I blew up my account. My account's at 50 cents. I'm going to go ahead and refund this account. I do like trading the futures. I just need to be a little bit more patient. So let me go over a few of these little things that I have right here that I written to myself. This is my trading strategy. I don't really need to read that to you guys, but right here, trading after hours, you focus on base hits. Do not hold a large size position going into the open morning volatility. Do not hold a large position going into the close power hour. Make sure your stop has enough wiggle room. So when you have your stop, you need to make sure that it's allocated for your risk. And I actually like this because you can go ahead and say, all right, you know, if I get in right here and I only want to risk, you know, my account's $1,000 and I only want to risk, you know, $200, they'll tell me exactly how many contracts I should be taking. And my stop, if my stop needs to be all the way down here, I need to give it all this wiggle room, then that is how much I should be taking. And if you had a $900 account, you'd have made $300 from right there. So make sure your stop has enough wiggle room. Set your dip buys in areas on demand under wicks. I'll talk about that later, but that's basically, you know, because what happens is you're getting stopped out. Everybody's putting their stop at the same damn spot, and what the market makers are doing, they're actually, you know, running you down to come stop you out. So what you do is you put your buy order. So like for instance, on this candle right here. So say right here, this candle right here, wick has formed. You know that a lot of people have their stops right here. We know this is a buy zone. So what we're going to do is we're going to actually put a buy order. After we've tagged out, we'll put a buy order, you know, right around under this wick. So when we get filled down here, cool. You know, this is buying into the, you know, the liquidity. People are going to be selling, because what happens is a lot of the times those wicks end up becoming those sells and end up becoming wicks. And last but not least, well, be patient. And then when you tag out of a trade for profit, do not chase right back into the trade zone. When testing from the top, wait for a type 2 or a confirmation breakout, then retest to buy back in. So what does that mean? When you ride it from zone to zone and you tag out at the top, you want to wait you basically want to go back into sniper mode entry. Okay, cool. Not just, oh, I'm going to get back in, it's a buy zone. No, if you get back in right here, your stop needs to be below that zone. Or originally where the play where your stop normally goes, and ride it up to the profit target level. Or for instance, right here, you would move your stop. So say you got back in right here, your stop still goes all the way back down here because it's still the trade that you're looking for. You would move your stop up like that. So that's a lesson. This one's 20 minutes long. I was rambling, but that's what these videos are. You know, when you blow up your account, it's a story. You got to tell what happens, and you got to tell what you're going to do next. So let's go ahead and look at the chart real quick, because this is the next trade that I am going to be looking for potential. I think we do have a short right here. I don't short up going to uptrends. That's actually in my my trading rules. In my trading plan, I focus on the direction. I'm not going to short while the markets are going up. But I do think this is actually a good short into this yellow zone. Make sure you put your stop right above right here. Yeah. So the next trade I'm looking for is actually a dip buy into one of these zones. And we want to ride this one up to a new all-time high. That is going to be, because I still think we're uptrending. I think we're going to continue this uptrend on the 4-hour chart. And then I can even turn on my little I like my little indicators, my little 1226. So this just shows basically which way we're trending. That's all it does on the time frame. So as you can see, we just got this bullish cross. I do think we do pull back though. Like I said, I'm looking for a pullback, possibly a retest to this baby blue zone right here, where our initial entry was when we wrote it up to the 13, and or possibly we set a lower high into this yellow zone right here. Oh no, not that one. Let me delete this one. Yeah, so this trade right here, and this one, let's say for instance you had a $500 account, you wanted to risk $100. Boom, you can take almost 2 contracts, and if the profit target hits, you will trade that account will go either to 400 or to 1500. So this is the trade that I like coming up into this these next few days. I think we do get some type of pullback. I'm gonna be looking to buy the dip, keep those tight stops tight. Keep them stops tight. Alright, man, that's it for this video. Anybody that stayed through and watched this whole video, I know you guys rock with me. I appreciate you guys. And Little Petty is